Ralph Silva, strategist at Silva Research Network, joins us now. Is that the figure that's a big concern? Lloyds gets 100% of its revenues from the UK, and we're heading towards a recession here.
Yes, and worse than that, it's not just 100%, it's 100% in retail banking, and that's the problem, is that they don't have much diversification, but they can't have much diversification. They have to fix themselves. The big challenge with Lloyds is they don't have to do 2 or 3 things, they have to do 200 or 300 things.
What are the big 3, would you say?
They have to reduce the size of the organization. Now, they've already done steps to that, and let's be clear here. They didn't get rid of their 600 most profitable branches. They probably got rid of their 600 worst profitable branches, which means the bank is already a lot better. Secondly, they got to change the management. The management's still some old management in there that's thinking old ways. You got to think more modern. And, of course, the bank that he came from, Banco Santander, is very modern, and it's got to be modernized. And third, they have to upgrade their technology. They have to reduce their price per transaction and be competitive with other banks in the industry. And right now, they're certainly not there.
Barclays forecasting a loss for Lloyds in 2012 because of bad provisions for bad loans. Is it going to be pretty grim this year for Lloyds?
For Lloyds, yes, because it is a retail-oriented organization, and if people don't walk in the front door and do business for you, you can't pay the bills going out your back door, and that's just a fundamental problem. There's just not enough new business. Now, remember, the big British banks have to grow to be profitable. If they stay the same, they're actually losing money, and I can't see how Lloyds is going to grow in 2012.
Transactions tax, another big matter that never goes away, Ralph. Sarkozy and Merkel will discuss it today. Sarkozy said overnight that it's unacceptable there's no tax on financial transactions and won't wait for everyone to be agreed before imposing the tax. I'm not sure whether he means just in France or within the Eurozone, but we're out of it. Cameron said it.
Yes.
How, if it is implemented, what form might this transaction tax take?
It'll probably be on the investment banking area. That's probably where most of the transactions are going to be. And, of course, there are stamp duties and things like that elsewhere in Europe, so we do have some experience on doing this. Here's the problem. Timing. It's not necessarily a bad idea when the banks are making a lot of money. But, in fact, right now what we're doing is pulling money out of the financial services industry, which means we're actually reducing the loan money. So I'm not entirely opposed to a transaction tax. I'm opposed to a transaction tax right now.
Does it affect profitability by a worrying degree, this transaction tax?
Not a worrying degree. It will affect profitability by maybe 2%. But the problem is the margins are so small. 2% might actually drive investment banking operations to places where it doesn't have that tax, and that's the real concern. If all of Europe does it, it's not enough. It has to be the G8 countries, and unless that happens,
America's not interested, are they?
Absolutely not. Why would they be? They need to grow their banking industry. They need more money in their banking industry, and they think in that way, and that's exactly what they're doing.
Talking about America, we've got stress tests. All the data has to be handed into the Fed. Today's the deadline. We know what happened with the last stress test because everyone flew by. The tests were regarded as weak. Bank stocks rose, rallied in the last 6 months. They're a bit tougher this time, aren't they?
I think that's an understatement. I think they went for their extremes. The last one was almost useless. Now it's so strict, I don't see how, in fact, all the organizations are going to be going to successfully pass this, except they're only looking for the capital requirements. The problem is if the economy goes down by 5% and unemployment goes up to 13%, the banks actually have a different problem. They're just not going to get enough new business. So regardless of what their capital is, they're not going to be a profitable organization.
And you're worried about not the big 31 banks, it's the smaller ones.
Yeah, I'm not really concerned. The big 31 banks have actually spent a lot of time building their capital. They're actually very solid organizations, 1 or 2 exceptions. The ones that are 32 down to 300, they're the ones that are the problems. They've been losing massive amounts of money. They have no new customers, and their debt loads are actually increasing. That's where we're going to have the problems, and we're not even looking at it.
Got to finish with Unicredit, Ralph. It's down for a 4th day, 40% lower. We know about the rights offering, priced it at a discount of 43%. Is this a benchmark now for banks that want to go ahead with rights offering? Are we going to see these sorts of discounts, and are we going to see these sorts of share price reactions?
I don't think we're going to see these anymore. I think what Unicredit has basically told us is very clearly, don't go to the investors for money if you need it. Not now, because they're not going to give you money. Find alternatives. What we're going to see is asset sales. We're going to see banks shedding off assets to make sure that they can survive.
The EBA wants more than that, doesn't it? It doesn't want you to sell assets. It wants you to go to the shareholders.
Of course they do, but the shareholders aren't actually in the same opinion. They're not willing to put out money. Maybe that changes in the next couple of months, but right now, it's suicide to go after some money from the shareholders from a banking perspective.
Suicide. Thanks very much, Ralph Silva.